All right, hello, good afternoon, everyone. Tim Davis coming to you guys with a quick market review. And I want to start out by taking a look at the SPXA 200R, which is again the tool that tracks the percentage of S&P 500 companies trading above their 200-day moving average. And I want to glance at a weekly chart and then a daily chart to show you guys what the broader picture looks like. So here is the weekly chart. And I already have some lines, some trend lines in here drawn that I've been watching for bulk of the past several months or so. And what I'll point out is, so this tool has pretty much been in this particular range here for quite a bit. Okay, so what I'll point out is, um, the higher the percentage goes, is the more like, I mean, it's a higher the overall market continues to stay in that elevator level. Put it to you that way. This percentage is since about the beginning of the year. I say since about right here, that was around October of last year to the beginning of this year, has been standing between anywhere between 30% all the way up to about 80%. Okay, and look where we at now. We got back up to about 80% level right around the beginning of the year. Then we pulled back, but it was a modest pullback. Let me get rid of all these drawings. It was a very, very modest pullback, which leads me to believe that we could be in store for a continuation higher in overall markets. We got a little modest pullback here. Then the percentage came back down to this 10 per moving average that I have drawn, which is this yellow line. And it's like it started to consolidate. See that consolidation pattern there? So when we pull back here, we just pretty much came down to the 10 per moving average and started to consolidate back and forth action. Looks like it's trying to make an attempt to come back up here and test around this 80% level. Right now we're showing at about 70%. So if we come back up here and test this 80% level, we could punch right through it. That's a possibility. And if that happens, we can see, the market, follow this continuation higher. Then if we get up in this area here, I call this area up here, this the danger zone area. Because when we get up around this area, we can see this market stall out. Because you can't go no higher than 100%. If we get around close to this 80 to 90 level, you can see the markets really start to stall out and then possibly see this tool start to pull back in a major way. And then the market will more likely to follow. So again, looks like it wants to continue, it wants to start back up and possibly test this 80 level, which is overall good for a bullish narrative for stocks. But then if we break through that, we can start to see stocks really get overbought in a major way. And if stocks get super overbought, then you get super overbought, then more than likely you would definitely see some type of reversal. But right now, this tool still shows strength. So if this shows strength, let's see what the overall market shows us. But before we do that, let's look at a daily chart in this particular tool. So daily chart here, again, looks like it wants to go higher. Look at the CCI, it's just starting to turn up in a positive sign, showing a possible buy signal in this particular tool. So again, looks like the market wants to continue to go higher. So now let's take a look at the actual S&P 500, SPX. Look at the this is the daily chart. Like it's still just creeping higher. Just back to this weekly charts, but I really want to focus on, because the weekly charts are starting to get a little bit over, not a little bit, but a lot overbought. So here's the weekly chart. Look at the RSI down at the bottom. I want to try to circle that area so you can see it at that finish bouncing around. Look at that RSI, 85. That is definitely overbought. RSI oscillator is up in no man's land on a weekly chart. So could we continue to punch higher? We could. We could continue to get punch higher and become super overbought. We could even see this, you know, this 84 turn to 90. And if we turn to 90, just be prepared for, you know, a pullback that could be substantial. So right now the bulls have this market by the horns, but we are in overbought territory. So just be mindful of that we could start to see some reversal eventually. Can't say when, but the bulls are in control until they're not, and we're in overbought territory. So over the next couple of weeks, could we continue to go higher? Yes, but eventually, if we see this RSI just continue to go higher, 84 to 85 to 89, 90, we get up there around 90, 90, you definitely can start to see some type of major pullback in the overall market. So right now the bulls are still in control. If I had to put a target, an upside target and a downside target here on the S&P, upside target I can see 5,100. That's a possibility. Downside target I can see is coming all the way back down here, back below 5,000, around 4,800. Okay, so keep that in mind as we continue to see this market creep higher. We could see a move, up to 5,100, and then we could see possible reversal over the next month or two. And to see how that pans out. This 10 per moving average will also act as a level of support as well. So if we do pull back, that would be the first area of support. We have to wait and see how this thing pans out as we continue to roll along. But a downside, target, if we break below this moving average, would be around 4,800. But it's hard to say if we're really going to pull back that much whenever we do pull back. Right now, again, the bulls in control. All right. Switch over to the Dow Jones Industrial Average. As if the charts will cooperate with me, because right now, can't get it to load. So let's see. And bear with me, folks. See if we can get this load. Try this again. All right. While the Dow Jones is contemplating on whether it wants to load or not, let's take a look at the NASDAQ. Let's see if this one loads. Okay, this one loads up. So switch to a weekly chart here again. Look at the RSI showing at 80, 81, I'm sorry. RSI showing at 81. The RSI at 81. And right around the 16,000. So 16,000 level is where we are hitting the fib retracement level. So if we continue to march forward here, we can see, we can see us take out this particular high. 16,212. 16,212 will be an area of resistance. 16,212 is an area we've been at before. We haven't got there yet. So we could be heading to that level. 16,212 on the NASDAQ. That could be a possible next level. All right. And if we switch to a quick daily chart of the NASDAQ. Again, right around the 16,000 level, which is an area of resistance. So do we hold this level or do we march up to that 16,212? We have to wait and see. And right now, the market is still on the upside. Continue to march higher. All right, now let's go back to the Dow Jones. Let's see if it wants to cooperate just yet. All right, I'm gonna skip the Dow for now since it does not want to cooperate. Take a look at the Russell. Here's our Russell. Out of the three, out of all the major indexes, I think the Russell has the most upside potential. Reason being, as you see the others flirting around all-time highs, if not already there, seeing the S&P, the Dow Jones, and the NASDAQ. Russell is a long way off from its all-time high. So Russell could be playing catch up over time here. So here's the Russell's high, 2458. We're only at 2047, so that is well off of its highs. And Russell is flirting around with a possible couple handle breakout. This was a strong resistance level for the Russell for quite some time, that 2000 level. And we are above that 2000 level now. We hit it here and we pull back. Now we're breaking above it. Looks like it wants to continue right there. See the 10-per moving average starting to just continue to go upward too as well. So it looks like we could continue to see the Russell show strength and continue to march higher after we had this slight pullback here, form some type of cup, and it's like it's ready to break out to the upside. So we could definitely see the Russell continue to gain strength. That's a possibility. Look at the daily chart of the Russell. Looks like it wants to, first of all, try and challenge this 2070 level. 2070 level would have hit before and pull back. If we hit that level, we could pull back a little bit, and then before it takes off again and head towards that 2400 level if it decides to do so. I don't know if Dow Jones is going to cooperate, but if not, you guys get the picture. Doesn't like it wants to cooperate. So you guys get the picture. You see where we're at now. All right, here is gold. Gold like it's still in an area where it could do anything to this point. So right now, look at the daily chart of gold is still pulling back. We could see gold come all the way back down to 2000. That is a possibility. Look at a weekly chart of gold. So you see, we're still just hovering, still just bouncing between 2000 to 2080. That's like where we been stuck between 2000 to 2080. This area right here. So you've just been stuck. So maybe we pull all the way back to 2000. We have to wait and see. And if we do, we'll probably get a rally right back up to that 2080 level before gold decides it wants to do something spectacular to the upside and reapproach 2100. But we have not did that just yet. Still in the back and forth phase between 2100 to between 2000 to 2080. That's the range. All right, folks. Hopefully this is information that you guys can use. There's a lot of good stuff out there that you can pick from if you're playing a bullish side, because the market's still showing some strength right now. But just be mindful, we are hovering around all-time highs. We're hovering around some overbought territories. All right. Till next time, Tim Davis signing off.